All right, welcome back to the 1 Minute Trader podcast. I am your host, Matt Davio, and today I have Taylo Drawn, who is, interestingly, I think a lot of people are going to find a lot of interest. You are the senior product manager for a company called Cloud Quant. And how would you describe Cloud Quant, Taylo, before I give the folks a little bit of background? I mean, if you just met me in the elevator again, and I said, "What do you do?" How would you explain what Cloud Quant is and what do you do?
Well, ideally, we're a trading strategy incubator. So what that means is that if you have a trading strategy and you want to try it out, you can use us to backtest, to prove out your strategy, improve your strategy. And then if you want, and only if you want, you can ask us to fund that strategy, in which case we will license that strategy and run it ourselves if it's going to look like it's going to make money. Now,
Okay, go ahead.
We're predominantly interested in doing that at scale. So we're not looking for things that we're going to put $10,000 for. We're looking for allocations of $10 million above.
Okay, so we're going to get into the details on that. Now, you've got about 25 years product experience in both, product and technology management. You are the senior product manager, so you're working hand in hand with the CEO, Morgan Slade, which a lot of people may know him. He worked at Citadel. I'm familiar with his name, read about him. And he's obviously a fantastic trader. You are not a trader, but you are responsible for, the marketing and the management of these products. And you've spent much of your career in this business meaning the financial and regulatory technology space. You've emphasized, I'm reading a little bit here from your bio. Your emphasis has been on the communication and the operational side of delivering, these quantitative products to the market. And that's a difficult thing, I would think, and probably has been for a lot of people from both management of, the trading houses, I would guess, were skeptical, probably way more than they are today. How can these actually run? And so you spent some time, you were the director of product design at Neurensic.com, one of the director of product delivery for futures at Societe Generale, CIB New Edge. And then you also worked for Cargill and with their investor services and capital markets consulting, in which you were a co-founder. So again, you've been around this business. You're another Big Ten guy based in Chicago. You're an IU grad, which I'm a big IU fan. I love IU. I went to the IU basketball camp, matter of fact, when I was in 7th or 8th grade, Taylo. And, that was when Bobby Knight was still, at the peak of his career in the late, I guess it would have been late 70s. And so we've got a lot in common. So how did you get involved with Cloud Quant and where, how long have you been involved and where do you see this all going?
Well, I started working with Cloud Quant back in April of this year. And how did I find them? I found them through just looking for innovative companies on the internet for what I was going to be doing next. One of the things that I feel very strongly about is that innovation does not start with large companies. It starts with people who have a major new brain idea, and you're not going to get that out of an institution as much as you are out of individuals. And so running into Morgan and what he was doing really caught my interest. It's like, wait a minute, this is a really innovative idea, and I want to see where we can take it.
So again, just being involved for 6 months, and you want to give people the opportunity. So if I had an idea and I thought it made money consistently, and I was trading soybeans, and I've made money trading, this program, even though I'm not a programmer, how would I go about figuring out how to do that with you?
Well, it's relatively easy. We utilize a technology called Python. And when you start talking technology, people start going, whoa, I don't know how to program. But we make it really easy.
Okay.
We basically, I think the first the first strategy that I implemented was probably 100 lines of code, and it implemented a trading strategy that was really popular back in the 90s when I first was getting really involved in trading technology. It was essentially a reversal technology, reversal strategy.
Okay.
And we put that out there for everybody to copy. We also put out a couple of other very simple ones. I think it took me a day to write my first strategy, and now I put that out for everybody to copy. And we're finding that between the two easy to copy strategies, that people are getting up and running really quickly.
Okay.
However, not everybody is comfortable with coding, and so we've actually taken some of the ideas that people will talk to us about. We'll code it up for them and give it back to them, and let them actually go and run with their own strategy, because we're more interested in getting to the license of actually licensing out that strategy than we are in who does the coding.
Okay. So again, if I came to you and said, I've got this reversal strategy that, was different than yours, and it's based upon this, this, and this, would I call you? Would I write you? How would we begin that conversation? And then, how would we know it was successful and, through the back testing? Because again, for people that don't do this every day, right, it's not secondhand, that are traders and maybe discretionary traders, how would I go about putting that into words that can be used by the program that can then spit out a possibility that, listen, we back tested this. And let me ask you, do you back test over, like, what kind of period is a successful time range for you? Is it 20 years? Is it 20 months?
Well, our back test technology goes all the way back to January of 2011.
Okay.
Of the 72 million in allocations that we've given out in the last two and a half months, those back tests, some of them have gone all the way back to the beginning of 2011, but for the most part, people are concentrating on the last 3 to 4 years in their back test.
And are the products that the people that are testing, is it strictly futures?
No, it's actually strictly U.S. equities right now. I'm hoping to get us into futures. I'm predominantly a derivatives guy.
Yep.
So we're hoping to bring futures online sometime in 2018. That project is on our books, but we've got.
Oh, I'd be happy to be a guinea pig with a couple ideas to try some of those.
Well, we would love to have you try them out. Sit down with you and show it once we get the data into our system.
Okay.
The core that we have, and we make it so simple for you to see whether or not you're profitable. We actually, when you run a back test, you get this chart out that it shows you whether you made money or lost money on that day and what your cumulative P&L is. Even anybody that I've ever shown it to says, you know what, I can tell what I'm doing.
So are all the strategies, are they time frame constrained? In other words, are these all day trade strategies? Are they multi-day strategies? Are they across the board?
They are across the board. We're not afraid of beta. We prefer a low beta strategy, but if you wanted to build a strategy that's buy and hold, you can do that in our back testing engine. If you want to do something that is day trading,
right,
that carries no overnight risk, you can do that too. You can start off doing your strategy on a 1 minute calendar or 1 minute bar type test, or you can very quickly advance and use the millisecond, almost not quite high frequency, but higher paced. When you hear high frequency, everybody thinks multiple microseconds, but we're down to the millisecond level.
Okay, so again, you are talking about strategies that can be very, very, very short, as you said, and almost almost the high frequency HFT type stuff, down to 1 minute bars. I like that, and I'm sure. And are the strategies across multiple equity indices? So U.S. and Europe, Australia, are they? Where are you looking?
Well, having grown up in Australia, I wish we were in Australia. It'd give me a reason to go back there. But no, we are U.S. cash equities right now.
Okay.
We are looking for other realms to expand into, but right now we're so busy with people that are developing algorithms and asking us to fund just U.S. cash equities. I think we're going to be pretty set for a little while here.
So tell us the root, because just give us some background on who Cloud Quant is. I know you guys work and are associated with and probably are capitalized by Kirshner Trading.
That is correct.
Okay. So tell us a little bit about how that works, because if people don't know, Kirshner is a pretty big prop shop, or were in the early 2000s, and I know they're still involved in proprietary trading. So how does this information that you guys are getting from people like me, if I wanted to give you an idea, it may work, it may not work, and then is that your information then, or do we share that? How does the technical nature of me coming in, providing you kind of an idea that may work or may work somewhat, do we tweak it together and then end up with something that the both of us share in?
Okay, so if it's your trading idea and you own it, there's no if, and, or buts. It is yours. We make that very clear in our user agreements and our license agreements. It is your strategy. We have to license it from you to run it.
Okay.
We can't see it. We can't even play with it. We can see the results, so if you've got a strategy that's achieving a Sharp of 10.0, chances are we're going to notice that on a report and give you a call and say, hey, you ever thought about licensing that? Because we're very interested in it.
Okay.
But it is yours. We don't look at code. We don't have access to the code. So it is fully your strategy. We will help you if you want us to help. We will get involved as a coach and look at the output from your strategies and say, hey, we're seeing this, and it might be better if you consider, maybe your exit strategy could be a little bit better than what it is. But we'll get involved in coaching if that is something that you want us to do.
Okay.
We grew out of the Kirshner family and the Kirshner trading system. So Cloud Quant as a technology has actually been around for about 10 years.
Mm-hmm.
It's something that the Kirshner group used extensively to get people to be more systematic in their trading. And so almost everybody who's trading with Kirshner uses Cloud Quant internally. Mm-hmm. Also, so we know it works.
Right.
We know it works really well.
Can you give us some numbers then in that 10 years, like what that did with traders, maybe initially coming in? Maybe they were discretionary in their trades, and then they kind of moved to more of a Cloud Quant type system where they became maybe less discretionary. Would that be true or not?
I would say that the evolution came more along the lines of, hey, I'm not being profitable anymore. I used to be a really good trader. Why am I not profitable anymore? Mm-hmm. And then they would go back and code up or have somebody help them code up their strategy in the way that they were coding and show them where they were breaking discipline. And so it became this, how can I get better as a discretionary trader? And it evolved more from that. And as they got better at being systematic and more disciplined in their trading, then they go, well, why isn't the computer just doing this for me? And so then we took the back testing tools in and actually started integrating it with our execution systems so that the Kirshner Trading Group could actually just run the strategies and oversee it. And
can you give me some numbers, like company-wide, kind of what happened and how, what were some of the results from doing it? Because I would imagine it would be substantial. Otherwise, you wouldn't still be doing it.
I personally don't know the numbers on those statistics, so I'm a little bit embarrassed to say that. as a product manager, I think I'm going to be on the phone with Andy Kirshner this afternoon and ask him those numbers.
Yeah, that would be a great marketing tool, I'm sure, for you to say, hey, we used to, be profitable and returning on average 17.1% using the same strategy discretionarily, and now we're at 27%, or something.
Yeah.
Like that, I would imagine.
Well, one of the best things that has come out of it is people who were only trading a few stocks, a few symbols, are now able to trade the entire market with the exact same strategy.
And
so
are those same are they and are they letting the computer putting the trades on Halo? I mean, is that what's happening?
Yes, they're watching the computers do it, and it's very easy to allow the Cloud Quant production system to actually do that. So our own portfolio managers are actually taking their code straight from Cloud Quant and proving it in the back test, and then running it on the production systems, the same code, and seeing it make money and sometimes lose money. That not every strategy always works, but most.
No, I mean, so when you look at a strategy, how do you define efficacy? How do you define success? I mean, I always, as a discretionary trader, I have always taught and looked to containing risk more than I have, hey, how much money can I make? How much money can I lose? And what are the best ways to behave, alongside, that type of world. In other words, if I can only risk a certain percentage of my capital on a trade or on a portfolio, I have to learn how to behave within that. Is that kind of where you guys want to start?
Most definitely. One of the things that, right off the bat, our scorecard gives you your Sharpe ratio, your Kalmar ratio, your trade Kelly edge, your daily Kelly edge, the average rolling 20-day win percentage, the monthly win percentage.
Hey, Taylor, do you have a screen that you're looking at right now?
Oh, yes, I do. You want me to share it with you?
Sure, share it if you want.
Yeah,
We can talk over it a little bit. Just because these key metrics, I think, for people to see what you're looking at, and then we can talk about that a little bit. That'd be great.
Okay, well, this is going to be a little bit of an embarrassment, because the actual strategy that I'm looking at is a result of a Quora question that came across my desk just yesterday or day before yesterday. And so this particular person, and I've actually shared on Quora this entire code and strategy. So the question was, could you develop a zigzag strategy to get you in and out of the market, and would it be profitable? And so over here on Quora, hang on, I just literally posted this. So the question was considering that prices zigzag, would it be profitable to target 1 to 4 ticks on a 5-minute candle? Okay. And so I actually coded up that strategy exactly as the guy asked the question, and gave him his results back. So
max drawdown. Ouch.
Yes, you don't want to trade this way.
Right.
Not on a 1-minute candle.
Yeah.
I looked at it, and it's like, oh, on surface this sounds like it would make money, but doing a 5-minute candle strategy on this probably is not a good strategy. But we actually got back all the results, and it took me about an hour to code this guy's strategy up, and legitimately tell him back that his strategy's probably not super good for this particular one.
Okay, I like it.
And you can drill into this and actually look at all the trades that it did make, and some of them, here, let me collapse this down, some of them were profitable. However, on this particular day, for the most part, this particular strategy loses money. In fact, I don't think it had one winning day out of a 6-month strategy.
Wow.
So
and were you just, did you just pick a basket of stocks? It wasn't anything specific. It looks like it was kind of like.
I did this on the Dow 30.
Yeah,
so
I was going to ask. It looks like the Dow, actually, with looking at the news.
Yeah, I traded up the entire Dow 30 and ran it for a 6-month back test. Now, that said, let me see if I actually have one over here that find another strategy that I may have run. Okay, well, sorry, it's a 1-day back test, but it was a similar test that there we go.
Okay.
This guy a similar question was, could he use gold, shorting gold to trade against the SPY, and what would that strategy look like?
Okay.
So this was another one that came to us over the internet, that they just wanted to know whether or not it would work. And I coded it up in a span of, this one was actually easier to code up. And this is the exact results. So it, this one might actually look a little bit better.
So again, I'm just looking here. I'm looking at your scorecard. Are these fixed items, and then you probably could add items in, or are these important, you think, for every trading strategy? Like you've got Sharp, obviously. What is it? I don't even know. What is a CalMAR ratio? That's obviously
it's CalMAR is actually a ratio that was developed by a California hedge fund, and it's a strategy. It's a more fine-tuned ratio that we look at. These are, if you will, the top 10, 15 that we look at. And you were saying, what is your average risk? You wanted to know what that was. Well, here it is. It's showing right in here. We do have the ability to bring down a report, detailed, much more detailed reports. And in the detail report, we actually bring down about 120 ratios and statistics that we look at.
Very cool.
And so when we're evaluating a strategy, we're actually looking at all of those. We're hoping to find gold out there in the crowd.
So I've got a strategy, and I don't know how to code. Where do I begin?
Well, it's the easiest thing to do is to register as on CloudQuant and go and copy one of our public scripts.
Okay.
So very easy to do over in our scripts. Under public scripts, we have these base working strategies. And so I told you about a strategy that I coded up. It was the TD sequential price flip. This was a strategy developed by Thomas DeMark. And it actually references in the code, I think I actually have the ISBN of the book that I coded it from.
Cool.
And so this is from page 3 of his book.
Okay.
A very entry level version of that. You just copy this and literally start playing around with some of the changes in code.
Okay.
Now, if you totally don't know code, we'll point you to a couple of Python learning programs, and if you can write a formula in Excel, you can write a code. You can write an application or write a strategy in Python.
Okay.
So I did not know Python a year ago, and I think it took me about a day to transition to learning Python.
Wow.
It's pretty easy, especially if all you're doing is working within our strategies. Okay.
So I'm looking at how many lines of code for this simple strategy, as you said, and a lot of people know Tom DeMark. Were you looking for 13s, 9s? What were you looking for? I'm curious, on this. I don't have the book in front of me, so I can't pull it open.
I was looking just, this particular strategy was looking for a down market switching over to an up market, and so we were looking for a 9. I believe. Sorry, I wrote this about 5 months ago. So
yeah, it's okay.
Hang on, just real quickly. It looks like I was looking for a 9. Nope, a total of 13 bars. So I
Right.
was looking for 13 bars and a flip in that case.
Okay.
And
So
if
can you show me like that little recap of the strategy and what it looks like?
okay, let's see if I have one that I've saved over here. Let's see, results. Base working strategies.
Hmm.
There we go.
Powerful. So so my eye goes to the max drawdown, 0.13%. That's pretty amazing, Taylor.
Mm,
And uh, now again, I don't know what time frame I'm looking at. I can't tell you. It looks like we're looking at February of 2017. So February of 2017, your strategy here, based on Tom DeMark kind of ideas from his book, showed that over a month, you had a win rate of somewhere around 72%. Is that it?
yes.
Yeah, that's
Yep.
phenomenal. I mean, again, and then your average risk. So you were putting up $8,000 to make each trade, and your average profit looks to be somewhere around 153, and that's probably it's minus commission.
Yeah,
That's
that's minus commission.
okay. So, and pretty remarkable. Again, sharp ratio of 9.47. That one, like you said, would show up.
Yes, that one would do. I actually, one of the things that I like this strategy. It was a strategy that I actually used in some of my own personal investing for a while.
What
Of
were you
course, I was.
trading, by the way? I don't
Uh,
see in here. What is it you were trading?
oh, let's see. What were we trading? So looks like on
Qualcomm?
this particular day, I traded Qualcomm, and let's see.
Oh, I see. Each day is different. Okay.
Yeah, each day there was a list of
Probably it looks like
probably.
Nasdaq stocks based on the probably Nasdaq 100 based on the first.
Yeah, I think it was a list of about 20 to 30 stocks were in this original. There's original symbol universe. So there, on this particular day, that I was looking at 4 of them:
Okay.
eBay, Intel.
So you could take this strategy, though. Again, let's just create a story here. But you may have started with 30 stocks, and then you could say, you know what, I want to expand this to just ETFs, or I want to expand this to, just reverse ETFs for that matter. Could you be very
Right.
specific and
Yes.
put that into that space?
Very easily, very
Wow.
easily. It's quite easy to do. We have videos on how to do all these and walk you through all this. Um, One of the things that's more fun for me is since I started my career in decision science and data science
Yes.
at Indiana University, it's fun to see it actually becoming a mainstream in the trading industry now.
Well, and you, I mean, if you were, I mean, you and I, you might be a little younger than I am, but I mean, we're about the same age. I mean, decision science degrees weren't around a lot probably when you went to school. IU had to be one of the first places doing that.
Yes, there were the year I graduated in 1988.
Yep. You and I are the exact same age, by the way. Yeah, there you go.
Okay, then there were 13 of us who graduated in the program
Wow. And was that the
back
first
then.
year, was that the first year of the program or had it been around for a while?
It had been around for about 3 years,
Cool.
3-4 years when I went through it.
Okay.
Nowadays, they have hundreds of people graduating in data science and data related majors. It's quite fun. My youngest daughter is looking to go into data science, and so I'm quite proud of her.
That's awesome.
Um, One of the things that I did with a University of Chicago intern that worked for me during the summer is I gave her this strategy, and I said, you know what, this strategy works really well, but when it doesn't work well, it really does not work well. I'd like you to see if you can improve this. And so I
Right.
just gave it to her, and I gave her access to, at the time it was Bloomberg stock sentiment data that is now available on our platform. So we have Bloomberg and Alexandria and StockTwits data.
That's
And
cool.
I was expecting her to go in and go, oh, I'll buy when I get a positive social sentiment score.
Yeah.
What she actually used it for, and what worked for her, was she took this Sharp ratio up, and she's the one who got it up to 9. She actually used only go into that buy pattern when the social sentiment is not negative.
Huh.
And so she actually used it in the mirror opposite of the way that I would have. I would have go, hey, if sentiment's going up,
Stay away.
then buy.
Right. Oh,
Yeah,
yeah.
but she actually did the opposite. She said, if it's not negative and you get this signal, then buy.
Yeah.
And it was one of those, oh my gosh, that's what data scientists are doing now.
What did that tweak? So if that alone made it a 9.47, do you remember what it was before?
It was about a 2.3 before.
So if let's just say she improved it 4 times.
Mm-hmm.
That's huge. And by the way, a 2 or 3 is good.
Yes.
Just so people are aware, that type of Sharp ratio is pretty strong. So have you taken, again, I just want to, I want to talk like we were sitting around a trading room, and I know you're not a trader. You've said that to me. But when you see stuff like this as a data scientist, does this go, I mean, do you want to put your money to work and things like this? I'm sure you have rules and restrictions because of
we do.
Yeah.
We do. We are, we're, obviously, our first funding for a crowd researcher happened on July 31st of this year.
Okay.
And since that time, we've gone, I think that our first allocation was 15 million. We've now allocated up to 72 million to ideas that people have out there in the crowd.
That's fantastic.
If you and I were sitting around in a trading room, chances are there'd be a little bit of group think going on in how we trade.
Right.
One of the things that's getting really interesting is the correlations between strategies that we know and that we've seen over the course of our career and what's coming in from the crowd they're not very well correlated. It's really fun to see somebody coming up with a strategy that doesn't track with the S&P 500 at all. That has very low correlation with what the market's doing,
Right.
just because in some cases the guy just didn't even understand the markets. He just understood data science, or he had a great idea for something and was able to implement it, or have us help him implement it. It's really neat to see an explosion of groupthink. These people don't think like the traditional Wall Street traders.
Mm-hmm. So that what you just said, I've got to ask you then, are you doing any back testing on alt currencies, with the Bitcoin? And do you have access to data there that you're plugging in? And are you running? Because I'm curious, because I always think that new stocks, for example, new IPOs trade differently than, say, DuPont. And
Yes.
they're wider, they're more volatile in general, just because it takes time. It takes time for Snapchat to become DuPont.
Yes.
You are going to trade a volatile name like Snapchat much differently than you would a DuPont, and
Yes.
therefore there are strategies for less movement and more movement. So with Bitcoin, hitting $7,400, which was a key fib level.
Mm-hmm.
By the way, are you running strategies and looking at these, and since you brought up correlation, are these correlated or non-correlated with, say, equities? Are these areas that you're looking at yet?
Morgan's looking at them. I have not gotten into the Bitcoin world yet, but Morgan is, and he is. If I were to take off all the enhancements that I want to the system, if I were to say the number one thing that Morgan brings up in a week, it's like, have you thought about Bitcoin this week?
Yeah.
So
Well, but with this, and honestly, Taylor, with this week with the CME coming out with a product, they're going to have a future,
yes.
a list of products now. What is it? June of 18? Is that the date that they put on it?
Oh, I hope to see it before then, but yeah,
Yeah.
June of 18. The guys over at the CME, they're rather innovative, and so
Yeah.
it's fun to see them getting into this market.
That's cool. So, all right. So if I wanted to come in and backtest that, I don't have access to data,
Not yet,
just equities. Is that right?
just
And
equities.
just U.S. equities. And what about options on
Uh,
those?
no, we don't have options in our platform either yet. So
Okay, so
um,
plenty of growth opportunity, obviously here. You could, as we talked about, Australian equities, European equities alone would, Asian equities would just, spike up. I would imagine just the volume of
yes,
people interested in your product. It's
yes.
really cool. You know, um, Gosh, I want to go down the rabbit hole in a lot of ways with you, and we'll probably have to do this offline. But what do you think is the big takeaway that you're seeing from this right now? You've been in the job, let's say 6 months. What are you most excited about?
What am I most excited about? I, what I'm most excited about is probably the number of crowd researchers that are coming onto our platform.
And
We're
when you say crowd researchers, define that for our listeners.
Oh, that's anybody with an internet and an interest to actually try something. So we've had Morgan will probably shoot me for saying this, but I think one of our crowd researchers that we've funded actually is a car salesman.
Okay. Yeah.
And so he's been following the markets for years. But he's a car salesman, and so that's his day-to-day job. He developed something that was very interesting, and we've actually funded that. I was on a phone call with a gentleman in Australia just yesterday who has a strategy that he's been trading that's more of a buy and hold strategy that we're going to take a look at, and we're going to help him get his strategy up on the platform.
Okay.
We've got people, I think on last check, there are people who are using Cloud Quant that are from 139 different countries.
Wow.
Now you cannot sit in central Michigan or central Moldavia
Yeah.
and code. Just 5 years ago you couldn't be involved in the markets,
Right. Right.
but now and you can trade at scale with us, and the typical crowd researcher is just some person who spent some time coming up with a strategy and then asked us to fund it.
Okay.
Now, the one thing that you haven't asked about is how much money do you make
Right.
if you are a crowd researcher, and every license that we have is slightly different. It's a partnership between us and the person who came up with the algo,
Mm-hmm.
but on average it's about 10%.
Mm.
So figure we just did a $25 million allocation earlier this week, and that $25 million allocation, that guy brings in 10% on that 25 million of risk capital. He's going to take home 2.5 million this year.
Because
Uh,
his returns are around 100% is what you're saying over the year.
if they are,
Yeah.
but say it's 10%,
Yeah.
so $250,000.
Right.
That's
That's significant.
$250,000 that he didn't put up a dime of his own risk for. It's
Yeah.
all
Yeah.
our risk.
So walk me through the process. How long did it take from, give me those two examples. You've got the car salesman and you've got another person, and how long from, getting together with you to decision to say thumbs up, we want to try this strategy with real capital. Like, what was the timeline? How does that walk us
Uh,
through?
I'll give you a very specific. Our very first allocation, the person is a professor in Europe, and he Started his research when school let out in the spring, and in end of July, we funded and started trading on July 31st. So he did it over his summer break. That was his research. Now he's a very disciplined. This particular crowd researcher he's a professor. And he works in data science, and so his research was probably a lot further than a lot of people's.
Right.
But he was doing it part-time during his summer break, and he still managed to go travel and take his summer vacation with his family. So
let me ask you, what kinds of things would when people are going through this process and they're trying to find the diamond in the rough, what kind of things are going to be imperative for you to go forward? What will excite Cloud Quant to take it to the money people at Kirshner or whoever it may be and say, we want to do this strategy?
Well, we're going to be looking for a sharp ratio, definitely north of 1, 1.0. We're going to be looking, we're going to pay attention to a little bit to whether or not, it maintained that sharp ratio throughout the entirety of the back test. And so volatility in sharp ratio is okay. But you don't want there to be a huge amount of volatility in that.
And how do you define volatility when you're looking at it for this purpose?
Well, if I'll see if I can get you back to that one particular gold trade that we did. Let's see. Doesn't look like it's there. So, oh well. Here, I'll just stop screen sharing here. If in the back test we're seeing that your sharp ratio was negative, 2 or 3 for a span of a month, and then all of a sudden it switched up to be positive 3 for the last 6 months, that's not going to be something that's going to scare us. However, if it was for a week, positive 2, and then for the next 2 weeks it was negative 1, and then we're looking at volatility like a lot of people would look at the VIX.
Right.
If it's shifting a lot. So,
in other words, you're looking. I mean, you are looking for strategies that work in all markets for sure, but you're understanding that volatility is a string and it's being pulled and stretched, or it's a rubber band for that matter.
Yes.
And that's it's being expanded and contracted over and over again. So, and again, this is probably where the tool is super helpful in tightening up, what is a good strategy, and maybe what adding another element that you need in the code possibly to determine, is this going to be successful in more robust volatile markets, right? Because we haven't had volatile, we really haven't, so if you're only going back to 2011, this is where I go, I really want to see what the strategy looks like in 08 and 09 when we had waterfall events. Now, Now that's not saying that certain stocks haven't had waterfall events since 2011. However, we definitely haven't had a market like we had, let's say 97 through 2002, 2005 through 2010, right? Those were 2 5-year volatile periods. Since then, let's say 2010. Now we're going on 8 years of no volatility, and it's like those times. So I'm just curious, like how you look at that.
Well, there are some tests that we can encourage a researcher to run, and there are stocks that have trended down over periods of time, and you can actually limit your back test to just look at those stocks and see how you did against, if you will. I have in my own list a doldrums list. And the Taylor doldrums list is a list of stocks that basically were flat for 3 months in a row. And if they stayed flat in a row, if you can make money in that, trading against the doldrums, maybe you've got something interesting. But that's really up to the crowd researcher, so somebody who is going to fall into oh, well, the market was entirely up over the last 3 years.
Right.
It's worth going back and looking at, okay, if I had just bought SPY, did I outperform that?
Mm-hmm.
And that's just, in some part, a little bit of the learning curve of using the system and learning how to play in the markets.
Mm-hmm. Well, this is fascinating, Talo, and I know my viewers are going to be excited about what we've talked about today. I want to respect your time, and I thank you for coming on. Any last thoughts that you would encourage people to do to get involved? Again, your website is cloudquant.com. They can find everything
Yes.
there that we've been talking about. They can deep dive there. If they haven't heard about you, I'm sure you're going to be, picking up some new viewers, and I'm sure you are every day because, to your point, I think, the new generation of trader is different. I'm curious, do you have anybody plugging in any type of, with Thaler winning the Nobel Prize recently, and he really, is one of the fathers of behavioral trading. Do you guys get into that side of, because I would consider what you're doing technical and probably has some, you probably have some fundamental pieces into it, and those are the typical two sides of traders, or two ways that people trade. But I believe there is a third and more important, which is behavioral. Do you get into
Yes.
that?
Yeah, and actually having access to the social sentiment data and the behavioral, and what people are thinking and saying on Twitter, and those data sets that are available, those are getting very interesting, and we've got people who are utilizing the sentiment data coming from Bloomberg and Alexandria and StockTwits. There's some very interesting strategies coming out of that.
Okay, so you guys have, when you say Bloomberg and in Alexandria, is that where the Bloomberg data is coming from, Alexandria?
No, they're three different data sets. So
I wanted to make sure. That's what I heard.
Bloomberg has a sentiment on their news feed, and it's very good. Alexandria, another vendor that provides social sentiment data, does the same thing. They're providing ratios and scoring on data that's coming through.
Right.
And StockTwits is doing the same thing. I was really got interested in what was happening in social media related to what people's opinions of companies, when I heard a story when I'm back at New Edge of a guy who put on about $9 million of risk solely based off of a tweet that came out of Japan when the Dreamliner caught on fire.
Really?
And he made a killing. He made a couple of $1 million out of that position, just because he was one of the first traders to notice that Boeing had a problem, just on something that somebody said sitting on a tarmac in Japan.
Interesting.
And so our trading signals are no longer just market data signals and things that we traditionally see, or in a headline that we see. That particular tweet hit Twitter 15 minutes before it showed up on Bloomberg.
Wow.
Okay. What can you do if you now have access to that data?
No, and you could probably do 90 million, not 90.
Yeah, it was the single best one-day trade that I've ever heard of anyone doing.
Yeah.
That's amazing.
Right.
And it was all based off of one person in Japan said that new Boeing plane's on fire.
Wow. And it was somebody that, was sitting on the plane, basically.
Or sitting in the terminal, somebody who actually saw it.
It was just a visual interpretation.
And so if I were to say anything, it's don't let your lack of knowledge about the markets prevent you from playing around. Mm-hmm. You no longer have to have a pedigree and sit on a quant desk on Wall Street to get involved in stuff that we are now making available free.
This is like if Peter Lynch was on your advisory board, he would be telling people, share what you know, right? Or use what you know to make ideas and decisions, because that is always, I believe, the best way for people to succeed in anything.
Yes.
But in markets, if I know that, Chipotle started in Boulder and I've eaten there before the other 49 states have, right?
Yes.
When that thing is coming public, I don't need McDonald's to own 10% of it to know that it's going to do well, because I've eaten there. And it's no different if I see something, on Twitter that I know is going to affect the markets. And I would say to you, I totally get this, because when Twitter came out in 2007, I had already given up television news. I pretty much don't read newspapers per se. I stopped all of that way back then, because it's all old news. It's already built into what I'm doing.
Right.
And I would say, so what I would say to you though is, okay, but the long form stories that maybe the masses aren't reading were of interest to me, and they still are, because I get stuff out of there that is more detailed than I would with, a after the fact USA Today article or a Money Magazine, front page article. So I love the idea, and I still do. How to interpret it and use it is the tricky thing.
Yes.
Like you said. And so, the guy with the Boeing thing, that's crazy. That's cool.
Yes.
So people have access then to that data via your platform also.
Yes.
Those three sources.
They can also load up their own data if they have their own interesting data sets that they want to upload. Keep in mind, it's theirs. It's not something that everybody gets access to. It's just them.
Yeah.
Goes into their private area. But if maybe I've got an idea that's based off of weather patterns, and
a lot of people do. Yeah.
I can upload a historical weather pattern source, and then we'll work with you to get that into our production system, and you can do your searches and your trading strategies off of those.
Bring your own data. You have data. You're going to be adding. I'm sure you're adding all the time, Taylor. That's probably part of your job.
We are.
Right?
Mm-hmm.
Yeah.
I mean, I've got. I was over at the Futures Industry Association and talking to people like Peak Soil and Raven Pack and others that all have very interesting data sets. I want it all. Any data set that I can get up on our site that somebody might trade off of, I want them doing research on it.
How about, I can see, obviously with sports becoming more and more legalized in the United States, as they already are in most of Europe, will that become an area, or do you have sporting information that, if people are gambling on betting on games,
that gets interesting. Do we go into something like horse racing or betting on football or something like that? I doubt we're going to go there anytime soon. I think we're more interested in crypto and futures and FX than we are getting into those areas. It'd be an interesting study to find out whether or not there is enough depth to be able to go into the sports area and trade at scale.
Scale's the problem.
Scale. We're not interested in doing small bets. We're interested in allocating tens.
Well, and that's where the scale the scale in crypto is already there, right? I mean, it's already built in for you. So I think that's an obvious step for cloud quant, and in the futures, I'm super excited. So that's awesome. Well, Taylor Drawn of Cloud Quant, thank you for coming on the 1 Minute Trader podcast. This has been fascinating. I could go another hour. We'll have to have you back on and maybe talk in greater detail, because this is a fascinating subject that I know more people are going to want to deep dive into. So thank you for coming on.
Thank you very much, Matt. I've very much enjoyed the time.
Me too. Thank you. I'm Matt Davio with the 1 Minute Trader podcast. Thanks for listening, and we will have you back on again soon, Taylor. Appreciate your time from Cloud Quant.
Thank you.